Good day, everybody. It's a blessing to be with you guys again. It's because Engelbrecht come to you with the weekly crypto roundup. Um, as you've maybe noticed, I wasn't here last week, where I was on a short holiday, getting revived and refreshed for the last quarter of the year. Yes, from September on, I believe it's downhill to December. So we've got 4 months to make things happen. So let's dig in and see what are we chatting today. So we have the IMF that's not against a global crypto ban. That's contrary to what we believe in the crypto world. The current belief is that the International Monetary Fund, the World um, Bank, all those type of organizations want to ban crypto because they have their own agenda, but that's not the case. So we're going to chat about that. And then real world asset and tokenization, that's where traditional finance and decentralized finance are coming together. So we're going to chat about a company that's doing some good stuff there. Then the Commodities Futures and Trading Commission, they are charging a few DeFi dexes with illegally providing financial securities to their retail investors. Then Vitalik, the founder, creator of the coin Ethereum, his account was hacked on X, which is formerly known as Twitter. So we're just going to chat and see what happened there. But before I go on, please, uh, today is the fortnightly newsletter is going out. So if you haven't registered, please register for that. It's where I give you the news, views, interviews, the latest crypto happenings in the crypto world. So if you want to be in the know and be educated, um, register for this newsletter. So, and then with that said, let's dig in. So the IMF, they say they're not against a global ban. So last week, the countries, the G20 countries, uh, group of nations, they had a summit last week where they issued a white paper, which states that they recommending stronger regulations of crypto. They also advise of more oversights of cryptos. So, but a total ban, they believe it's not worthwhile, it's not good. But they also state in this paper that stable coins pose a risk to the financial stability. And so that's one of their recommendations. Just remember that stable coins are crypto coins that are backed by paper assets, bonds, debt, US debt. So they are backed by stuff, and they believe there's a risk involved with the current financial stability if uh, these coins are not regulated properly. So let's see what happens there. Then also real world asset and tokenization. So like I said earlier, is that when you hear the word real world assets, that's where traditional finance, that's the current financial system that we know of, that's where that world meets decentralized finance. And one of the companies that's busy with groundbreaking work is a South Korean company called Mirai Asset Securities. They're working with the Polygon Labs. So Polygon is a crypto coin, and its development arm is Polygon Labs. So Mirai Asset Securities are partnering with Polygon Labs to create this infrastructure, real world infrastructure. And they follow the Project Guardian, that's currently underway with Franken Templeton and the Monetary Authority of Singapore. So there's a lot of projects um, on, underway where these companies, together with blockchain developers, are creating real world asset infrastructure. So uh, when you think of um, real world assets like bonds, real estate, fine art, equities, and you ask the question, how do you get those assets onto a blockchain? Then I want to tell you the word tokenization is a new buzzword that you can hear more and more of. Because what happens is that with tokenization, you take a real world asset, let's say real estate. Let's say the real estate is R1 million. What happens with tokenizations? You issue maybe 1 million coins of that represents this asset on the blockchain. So you put 1 million coins on the asset, and this 1 million coins will represent this asset. So what happens is that this asset can then be owned by a number of people, one or a number of people. So if you have a syndicate that wants to buy in this property, and there's 5 people, they each can own 20% of this property. And obviously, it's on the, you have proof of ownership because it's on the blockchain, it's immutable. The coins cannot disappear, so you cannot hack it, you cannot steal it, it's on the blockchain. And in the case of transfer of ownership, you can either, these different owners, in our example, these 5 owners, they can then sell that share to another person, or they can get more members to join the syndicate. So tokenization is a very cool way how to get more ownership or give access to ownership to more people. So this trend is growing very fast in cryptos. You'll see more and more of that, and this is very exciting because that will make cryptos tangible for the average person on the street. Because because we already have it in our current system in the terms of sectional titles, where they've broken up a large piece of property, and you have a number of owners that own a piece of that property. So it's nothing new. So it's literally, tokenization is just the digital version of something like sectional title. So yeah, watch out for that, very exciting stuff. Then the Commodities Futures Trading Commission, they are charging 3 dexes with illegal derivatives trading, according to one of the newspapers. So all 3 are accused of illegally offering leveraged commodity transactions to retail traders. And sure, and these guys have been fined a pretty penny. The OPN has been fined 250,000, 0x has been fined 200,000, and DairyDex was fined $100,000 each. And yeah, they got a serious fines because it sends a message to the DeFi industry. I think the CFTC director summed it up. He says somewhere along the way, DeFi operators got the idea that unlawful transactions become lawful when facilitated by smart contracts. That in itself is a very one-sided statement, and I think this statement echoes a lot of what the SEC is doing, the Securities Exchange Commission of the US, where they are out. They follow regulation by enforcement policy at the moment with cryptos. They believe everything is securities and must be under the ambit of the SEC. So yeah, so when you read it or when you hear the statement, just take it with a pinch of salt at the moment because it's very, very one-sided. So yeah, and then last, Vitalik, the founder of Ethereum, his account was hacked, and it's a very unfortunate event because what happened is hackers were able to send out malicious phishing link, because once they hacked his email, they then impersonate his account, and then what they did is they sent a link out to steal more than 691,000 in cryptos, mostly NFTs, by gaining access to people's wallets. Obviously, when they impersonate Vitalik's account, people seeing his message will believe it's him, and obviously the link in that message will take people to unsolicited site, insecure site, where this link might request them to send money or whatever. And so a lot of people lost their NFTs because of this, and the speculation is that Vitalik was a victim of a SIM swap, where it's just a technique of to overtake a user account in crypto. So very unfortunate, because Vitalik has 4.9 million followers. So yeah, let's see what happened with this. But hey, my heart goes out to those people, and because we believe the people that we follow, they do honest business, and even if they do honest business, there's always somebody else that tries to take your money. So, okay, then we have Show Me the Money, and today we look at the crypto money making strategy number 2. So, and this strategy is all about Binance Earn. So Binance, for those of people who are new to the channel, is a cryptocurrency exchange where the people use to trade, and this exchange, Binance, is one of the largest, if not the largest, in terms of liquidity and volume. So what they offer is 2 types of earnings. So what you do is they have a protected and a high yield offering. Users can choose to invest their crypto for predictable returns, or high yield staking coins that provide higher than average gains, but with corresponding risk to your investment principal. So basically, if you are new to crypto, the ideal will be is to rather go for the protected version offering, because you get started with products that's listed there. You'll see there's a few, this screenshot of the landing page of the Binance Insight, and the yields are quite stable, and you'll get your principal back upon redemption or at the end of the locking period. You'll see those periods that's there, 20, 60, 90 or 30, 60, 90 are locking periods, so you'll get your invested principal and the interest you'll get back after that period. So it's a very safe way at the moment. There's obviously the higher yield, the high yield products, but I'll suggest you do your own research into those coins, because it's high risk, high yield. But still, it's a good way if you have cryptos, but you don't want to let them just lie there. You want to help them grow. So then it's a good way to use of these products to help your crypto grow. So I've talked about a lot about real world assets. I talked about the CFTC charging dexes. And some of these things might go over your head, and you think, but wow, I'm totally overwhelmed. How will I ever get to learn about cryptos? How will I make money with that? If you have those feelings of overwhelm and you think this is crazy, I might have the option for you, or option, and that's my online course, The Business Owner and Salary Earner's Guide to Cryptos. So with this product, I want to get the person that's new to crypto, that maybe has burned his fingers with crypto. I want those people to go through this course, get to learn the basics of cryptos. I mean, lots of these things that I'm talking about in my weekly videos is covered in the course, but I teach you the foundational stuff in this course, because I believe that's where you start. If you want to be good at something, you need to be good at the basics of it. That's what I believe why sportsmen, like the Springboks, currently playing in the World Cup, they are good because they do the basic stuff well. They scrum well, their lineouts, they perform well, their running, the defense, they do well, because that's the basics of rugby. In order to do the basics of crypto, you need to understand and do the basics well. And that's what I teach you in the course. So what will you learn? The course is made up of 4 milestones I want to tell you about. These milestones consist of 4 sessions, and each session have a module, 2 modules connected to it. All in all, 8 modules that you will learn. So the first module, we'll talk about the building blocks of cryptos, blockchain, what's cryptocurrencies, what's a decentralized and centralized financial system. You learn the role players in a crypto transaction, the sender, the receiver, what's a crypto aggregator exchange, what's gas fees, all those things, basic things that you need to learn in a crypto transaction. Then also crypto trends. What's the trends in crypto, the DeFi, that you can take out insurance, you can with cryptos, you can borrow, lend, all these things I speak about in crypto trends. And then I'm compared the traditional finance world with the decentralized finance world. Crypto tax, yes, if you deal with cryptos, you must pay tax. Then very important module 6, as I'm discussing the global events and the regulations that's shaping crypto. A lot of things are happening. I'm also revealing the white paper, the position paper of the Intergovernmental Finance Working Group that's locally in South Africa, what their plans are, how they want to regulate crypto in South Africa. Then in module 7, I answer the big question, how do I make money in cryptos in a legal, sustainable, and a profitable way? Then lastly, I'm covering the mindset. Currently our mindset in our financial system is, I have money, I give it to a financial planner, and this financial planner must invest it with asset managers, which will make me money. With crypto, you need a slightly different approach, different mindset. You need to take a lot more responsibility. You need to make sure that you understand the basic how it works, because it's at the moment it's not as simple as just giving your money to somebody that claims to be a fundi or an expert in the cryptos, because a lot of people lose a lot of money. Yesterday, I have another person that phoned me and said, listen, I met this guy on Instagram and he was telling me all the good things. He was smooth and he wanted money from me, and I sent him money. And yeah, please don't do that. I mean, a lot of people in the crypto world are out there to take your money, but there's also a lot of people that wants to help you do legitimate business. So yeah, what do you get with this course? I'm sending you all the recordings. I'm also sending you the links to websites, crypto money making strategies. What's the strategies out there to make money? Then also my famous 1-hour crypto crash course I'm sharing with you. That's 5 little e-booklets that will tell you the basics of cryptos in under an hour. I'll share with you my newsletter, white papers, like I said, the IFWG white paper I'll share with you. And then I've shared with you my lessons learned, the 8 painful lessons I learned over the last 7-8 years in cryptos, and then a very quality product, which is my DeFi ebook bundle, how to DeFi beginner, how to DeFi advanced, how to NFT, and how to Bitcoin. Together, these ebooks worth is almost more than $60-70. So you will get a lot of value, not only from this bundle, but of the whole online course. So with that said, I hope you found value with this video. If you did, please like and subscribe to my channel. Share it with your friends, people that want to learn about crypto. Hit the notification bell to be informed of new releases. And comments. Give me a comment. What do you like? What do you want to hear more of? I'm here to serve you. I'm here to help you. This is Vikas Engelbrecht signing off. Be blessed and have a blessed weekend. Cheers.